We're here with Aswath Damodaran, Professor of Valuation or Finance. What's your official title?
Finance.
Finance, Professor of Finance, and probably one of the 10 or 12 people in the world that can actually move markets. When you go on CNBC and you say something, you actually see the market move. So let's look at some recent acquisitions. Charter-Time Warner and Verizon and AOL. What do these look like to you? Good idea, bad idea?
I think what they reflect is that these companies are in bad businesses. The way these businesses are being run right now, the companies are not making enough money to cover their cost of capital. Something has to change. And consolidation is, I think, one potential answer is maybe fewer companies, less competition. The bad news is that means higher prices for the rest of us.
So that makes sense for Charter and Time Warner, but Verizon looks like it's trying to get into a different business with AOL. That doesn't look like consolidation.
Verizon, I think the reason I would still think of it as an extension is what Verizon is finding is it's losing its power to the content business. Yeah. People who have the content essentially are setting the prices, and Verizon has to be a price taker. Yeah. What they hope to get with AOL is that they can control some of the content on their own. And by doing so, perhaps get the pricing power to get back margins and profits and get back to being a good business.
Yeah, and so Verizon only had to give up about, I think, 2% of its market cap to take AOL out. So even if it's not a great acquisition, it shouldn't have that big an impact. Charter, Time Warner, that's obviously more of a kind of a bet the ranch or that value destroying or value creative strategy. Do you have a sense for the prices or viewpoint on either of those?
I think that the Verizon acquisition of AOL, I think of it as an acquisition of an option. Basically, they bought an option. If it doesn't pay off, they'll throw the option to the trash can, so that didn't work out. But it's so small relative to Verizon as a company that they can take that risk. In a sense, they have almost nothing to lose because their business, as it stands right now, is only going to get lower margin and less profitable over time. So they've got to take a gamble. Yeah. The Charter-Time Warner, I think, is more reflective of an infrastructure business. What they're hoping for is that the technology doesn't shift onto them. That's the big risk, is that 5 or 10 years from now, we don't need the cable guys for any of the stuff that we do. So they'll be paying this huge price, and both sides, in a sense, will pay that price. But the reality is, whether this merger happens or not, they're exposed to that technology. What they're hoping to do is by consolidating, maybe they'll have a shot at getting back at that technology.
So you think there's further consolidation in the cable space? You think we're going to see a bunch of these things?
I think the cable space is going to meld with these spaces. I think entertainment as an area is becoming broad enough that all of these companies are really competing for the same space. Mm-hmm. It's 10 years ago, 20 years ago, that each segment did its thing and was able to make money in its segment of the entertainment business. I think increasingly this is one business. And you see this with the Netflix and the Amazons of the world is they're moving out of their little spaces into spaces that were meant for other companies. Yeah. Okay? So I think increasingly you're going to see competition in this space from companies you didn't even think were in this space. Yeah. You might see an Apple in here and a Google in here for the next decade. Yeah. And that's what's going to shake up this space.
And do you see any natural couplings coming our way when you look at two companies and think they should, any predictions in terms of who's next kind of being taken off the dance floor?
I think if the social media companies were not as highly priced as they are, you'd see a lot more of them being assimilated by the Googles and the Apples of the world. Mm-hmm. The problem is that the prices you're paying for these companies right now, it's a very expensive option. Yeah. So if you're Google thinking about an electric car, buying Tesla is a very expensive way of getting there. Yeah. So I think part of the problem is that the levels of the market you have right now, it's difficult to see the kind of couplings you need to make money in the future.
Great. Thanks, Professor.
You're welcome.